Okay.
Welcome. Welcome to our webinar today, Cash is Queen or King, depending on your perspective. Our goals for this time together are to talk a little bit about the economic environment and specifically to provide some tools, resources, and ideas for you as a business owner to survive this recession, so that you can thrive when it's over. So one of the things that we'll be doing at the end is taking questions. So please put your questions in the chat boxes as we go along. And Robert Lamoth, who's here with me, will be summarizing those so we can answer them at the end. So you want to have all your questions answered. And this is an odd economic environment. It's changing daily. I've been in business since I was in my 20s, so I've seen lots of recessions, but this is the first that I've seen that created by a pandemic. So I think it makes it much more challenging in that we are, usually recessions bring economic fear, but in this case, they're also bringing our health fears and for our physical health. So it makes it even more challenging to stay grounded. So we're going to talk about the environment, the economic environment that we're in, how we're going to assess our risk as individual business owners. How do we learn to stretch our cash as much as possible? Because again, it's about keeping cash flow coming so you can still be in business when the recession is over. Businesses do not go out of business because they don't have customers. They go out of business because they don't have cash. So really understanding how to do that. So we're going to give you 2 tools for monitoring your cash to make sure that you know where you are all the time and you know how you're going to get through this recession. We're going to talk about finding opportunities. Every economic environment offers opportunities. This one is no different. So we're going to talk a little bit about what we see as opportunity points. And then we're going to give you some suggestions for, as a business owner, staying out of fear. If you lead with fear, your team will be in fear. So you have to stay grounded and stay confident. So we'll talk a little bit about that before we end, and we'll talk about how to get some more help, more resources that we're going to be offering at MACKEY. So let's move on and talk about the environment. Oops, sorry. Our economic environment currently, of course, is being created by this global pandemic, but it started with our understanding about supply chain risk, right? It started in a environment in China where it was centered on the manufacturing core of China, and we began to hear about people who couldn't get parts to manufacture the rest of their supply. And that seemed to be disruptive, but not life-changing. But of course, as the pandemic has come into the US, we've seen businesses shutter and main streets go quiet and blank, and nobody's out anymore. We're all staying at home. So of course, that's creating uncertainty. This is a whole new environment. Anytime there's a new environment, there's tremendous uncertainty. What I expect, and what a lot of the economists I follow expect, is that this will be a very deep V. It won't be a long V. In other words, this won't be a long recession, but it will be an intense downward spiral. So because it's going to be fast and down, we need to respond fast and down to keep our businesses afloat. So we have to respond with the intensity of what's happening. Many businesses will fail. The purpose of this call is to spread some tools and some resources so as few businesses can fail as possible. We want as many small businesses, which are the engines of our economy, to stay in business, to stay as employers, and to grow and thrive in the future. So let's start about, what do you do first? What's the first thing you do? The first thing you're going to do is assess your risk. Really have 2 main risks. So it's like, how do you look into the future as far as possible? And how do you stay clear, like, where did you come from and where are you going? So, and where are you going is, do you have revenue stream risk? Some of you know you have revenue stream risk because right now you have no revenue. Your doors are shut. And for some of you, you have disruption coming from behind you. You have supplier disruption. In other words, you're having trouble, again, getting the pieces and the parts that you need to continue to stay in business. So both of those are disruptive. And and the other thing that's really interesting and happens in most recessions, but is even more dramatic, I think, this time, is that some industries are winning, some industries are losing. Those industries that are winning, of course, are those that don't require person-to-person contact. You're seeing a lot more. I don't know about you, but I'm having a lot more Amazon deliveries, and that's because we're not going to the store, right? So people that are selling food and people that are selling toilet paper are doing very well. For those that are in the education, hospitality, personal services business, it might not be quite as rosy. So understanding what's your risk, where are you at risk in terms of your revenue stream and supplier, and estimate the impact of that risk. What does that risk mean for you financially? Get out your financial statements, your past financial statements, and look and see what's at risk here. So once you've kind of made a risk assessment, the next thing you're going to do is think about how you're going to stretch your cash. So just like the picture of the mushrooms that you see in front of you, we want you to see cash as far as you can see out in the future. And we're going to look at how do you make your cash work for you longer? How do you hold on to your cash longer? How do you get more cash in the door? What are some opportunity points there? So the first place to look is on your balance sheet. If you have inventory, what's turning in your inventory? What's not turning in your inventory? When times are good, we get a little lazy as businesses and business owners. And sometimes we carry things on our inventory that we don't sell very often. I've walked into businesses where they had 6 months of inventory on hand. And they'll say, well, I got a good deal buying this. But they've got enough to sell for the next 3 years. So in times like this, you're going to wish that you had cash instead of that inventory. So if you've got things out there like that still have demand, but you're not selling very often, see if you can get creative about getting out on the internet, getting some e-commerce going for yourself, and getting some of that inventory converted to cash. I had a company once that decided to take this seriously, this idea of reducing their inventory, only holding what they need. They managed in 90 days, they paid off a $400,000 line of credit. So if you've got a lot of inventory, look there first. The second place to look on your balance sheet is your accounts receivable. Many small businesses are not really great about having good collection policies. And let's face it, the last thing you want to do is call people when they don't pay you because it's uncomfortable. So do you have a written collection policy? Do you follow it? Do you have someone in your business who is assigned the job of collecting accounts receivable? I often find that it's kind of somebody's job, but not really. Well, it needs to be somebody's job and they need to be super accountable for it. And you need to be holding them accountable for it. So if you've done work and you are owed money, you're not in the business to be a banker. You're in the business to do whatever you're doing. So make sure you have good policies. So it's first thing Monday morning, get out your accounts receivable, prevent an aging report from your QuickBooks or whatever software you're using, and look and see who owes you money. And make sure you're in contact. Those people are going to be, all your customers potentially are going to be strapped for cash. You don't want to be the last one to be paid on that list. So get in touch with whoever owes you, starting with your older people and moving up, and use this time while you're not busy to create a great accounts receivable collection policy. Second thing you might want to think about is how are you going to do business moving forward? If you've always let people pay you in arrears, do you have to? I mean, can you take advance deposits? Can you have, say I need 50% up front? Some people are doing custom work for their clients, and still yet not getting paid up front. That doesn't necessarily make sense to me. So this is the time to think outside of the box. How are you going to do it differently? Can you have deposits? Can you have prepayments on your orders? Think about that. If you can get those prepayments in, that's going to help you with your cash flow immensely. If you're in a retail environment and you've been shuttered, your customers want you to stay in business. At Christmas time, a lot of retailers promote their business gift cards. Why not promote your gift cards now? Some of the people I do business with have a Christmas promotion that if I buy 4 $25 gift cards, I get one free. Why not do it now? Your customers, your clients want you to stay in business. So let them help you if they can. The third place to look on your balance sheet, and everybody, if you don't have receivables, you don't have inventory, you do have payables. So everybody in business has accounts payable. So the question is, can you stretch your payables? In other words, if you have a normal pay policy of I pay every 30 days, in our office, we tend to pay every 20 days because we like to keep people happy. And we've been able to do that, so that's nice. But if you can't do that, how do you begin to pay people slower? There's different schools of thought on that. One is that you talk, especially if you have a key supplier, You don't just slow pay them automatically. Maybe you have a conversation with them. You know, one of the things that's true in an economic environment that's changing is you can never over communicate. So if you have someone who supplies virtually everything that you sell, before you slow pay them, I would suggest you have a conversation with them, and they'll understand what you're going through, and ask them how they can help you. See what they can do. I've had other companies that just said, look, I'm going to take everybody, instead of paying them in 30 days, I'm going to pay them in 45. When people call and complain, I'll put them back on 30. And then after a few months, I'll take all my 45s and I'll put them on 60. And if whoever calls and complains, I'll put them back on 45. And they do that till they get out to 90. And surprisingly, they ended up getting more terms from people that they didn't expect to get them from. Because again, it goes back to that accounts. You're their accounts receivable. Nobody likes to call people who haven't paid them. So sometimes it's really easy to stretch your accounts payable. So talk to your vendors, depending on your culture, slow pay your vendors, whatever it takes, but stretch your payables. You may be able to take some of the bills that are coming up due, like your rent. You may be able to say, apply your deposit or put that into the future. Or if you're self-renting, perhaps you lower your rent to just the mortgage payment in the short term. So that's how to make cash appear from your balance sheet. Anytime you've got inventory, accounts receivable, on your balance sheet, you have locked up cash. So that's where to start. Unlock that cash. And then payables are cash that somebody else has loaned you. Let them loan you a little bit more. The second place that we're going to have to look in every recession is reducing expenses. As I said, we tend to think of whatever economic environment we're in as the way that things are going to be. So when things are good, we think that's going to be forever, right? And when things are bad, we think it's going to be that way forever. And it can feel that way, but it isn't that way. It's never that way. You know, just like we have 4 seasons every year, we have economic seasons as well. So we're going to have expansion times and contraction times. This is an intense contraction, but we've been through an intense expansion. So I cannot believe that you don't have things that you're spending money on that aren't critical to your business. And depending on how much risk you're in right now, might mean how many of those things you need to cut for right now. So, you know, if you're in a business where you need a dumpster and you're closed, do you need the dumpster? You know, that's a real simple idea. Cut the dumpster. The other thing is, if you're going to close your physical location for a while, maybe you don't need internet service because everybody's going to be working from home. So get creative. Look at everything that you're doing and what can you cut today? What's easy to cut? Make that list. And then these are the second list, which is, I don't really want to cut these things, but if I have to stay in business, I will. Because though if the goal is to stay in business, right, to survive this downturn. So what would you cut if you had to? So make that list. Even though you don't want to make that list at the same time you're making the first list. It's much more efficient, and it's why you've got your expense cutting hat on. So the third point of managing cash is debt management. And we're lucky today to have Robert Lamothe with us, who's an expert in debt management because he's worked in the banking industry for so long. And Robert is here to help us. But I'm going to kind of briefly talk about some general things and then suggest you get in touch with Robert. First of all, if you have long-term debt, so you have a building or a facility that you have on a long-term debt finance. Now, you know, look at your interest rate. Now might be a great time to refinance that and lock in low rates. Your bankers aren't busy. Maybe you're not busy. So use that opportunity to lock in some rates. Rates are going to stay low probably for a while, but probably not as low as they're going to be. So use this as an opportunity point. The second thing is, if you have term debt like equipment debt, even if you have building debt that you can't pay, be sure you're talking to your banker. You know, so many times I'm with a client and they'll say, oh, I have bad news. I don't want my banker to see my financial statements. Again, you cannot over communicate, and you cannot communicate without integrity. If you start telling your banker not the truth, they're not going to believe you. Credibility is one of the most important things that comes to being a credible borrower. So be honest, tell them where you are. They're kind of going to figure it out one way or the other. So might as well fess up. Okay, so be truth. And the third piece is, as you know, the SBA is offering disaster loans. Those are not widely available because every state has not declared an emergency, although we expect everyone to. And the firm MACKEY is offering anyone who needs that help, clients and non-clients, the assistance with applying for the SBA disaster loans. All you need to do is email or call Robert, his email and phone number on the slide, and we would love to help. He would love to help. We want to, again, our goal is to help as many businesses as possible stay in business so they can thrive after the recession. All right, so I think we'll probably have some questions about debt. We'll talk some more about that later. So let's move on to, okay, we've got our idea put together, how we're going to stretch cash. We've got some ideas of we've assessed our risk. We think we're talking about managing our debt, but now how do we stay in reality? I like to say the best thing what I really love about accounting is that it's data, it's factual data. And if we make decisions from good data, then we have a very good opportunity to make good decisions. It's when we make decisions from our gut or from fear or from knee-jerk reactions that we tend to make bad decisions. So very important to start with the facts. Don't be looking upside down, sideways, or front. Look straight on at what's the truth in your business. So how are you going to do that? We're going to give you 2 tools to take home to use that. Or not to take home. We're going to email them to you. that's the way, right? So the first one is a cash forecast. I don't generally recommend that every environment that everyone forecasts their cash week by week. But in any environment when you're slow or the economy is slow, forecasting your cash week by week is essential. The tool that we're going to send you is basically a fill in the blank forecast. It's very simple. You start with the beginning cash. You add in you reduce your cash by your payables and your expenses and your payroll, and then you start with a list of things that you're going to cut, your expense cuts, and you end up with your ending cash. So if you look at the cash forecast that's on the screen, this business is projected to run out of money, run out of cash, sometime toward the end of June. So what I'm going to suggest is that you put together your own cash forecast using the tool that we're sending you. Again, it's fill in the blanks. So you should be, it asks you the questions of what you need to fill in. And it automatically creates all the formulas are already built in. So, and you do this and you do it every week at the same time. So every Monday morning, every Friday afternoon, whatever schedule you want to have, but do it once a week at the same time every week. Where's your beginning cash? What are your expenses today? Because you may cut some today and you may have to cut some more tomorrow. Where are you today? Where are you going to be at the end of the month or the end of the week? Sorry. So looking at that and staying in reality about what's really happening in my business will keep you from making some of those knee-jerk decisions and give you the tools to make better decisions as you go along. So that's a week-by-week forecast. Again, a simple idea of where's our cash. Now, the other thing I'm going to say about this before we go on is do it every week, save it. It's an Excel spreadsheet, and then we create a new file for the next week. Just write over it because you want to be able to go back and see how good were you. One of the things I find about forecasting is very different from accounting in that it's looking to the future, not the past. Accounting is all about the past. When I'm forecasting, it's a little more of an art. I have to think about what the future is going to hold, and I can do it. Maybe I do a good job of that, maybe I don't do a good job of that. So I want you to save every week and look back and say, how well did I forecast my cash? Because you'll get better each week. If you erase over it, you might not notice, but you will get better. It's like any new tool. You're not going to be you're not going to be perfect at it when you first start. So use it and keep getting better. The second tool we're going to send to you at the end of this webinar is Cash Headroom. This is my most favorite tool as a business owner ever. I use it in my business. I get it emailed to me every Monday morning. And there are only 3 important things about this graph. One is it tells me what my cash headroom is. I'll tell you what that number means in a minute. It tells me what I'd like it to be, which is the green line. And it tells me where the warning is. When am I in a situation that, oops, I'm getting a little too tight here. This is actually a cash headroom report that we've been doing for a client. We meet with them every week to review it and talk about where they are. This is a person who had cash problems they've been in business for 20 years when we met them. And for 20 years, they had trouble managing their cash. This one simple tool and a discussion about it every week has changed their lives dramatically, because they now know if you look at this graph and you say, I have 2 or 3 times the amount of cash that I think is the amount I need to have, you don't need to worry about that anymore. You can go run your business. That's the point of good information. If I have solid information, I know from where I stand, I don't have to think about it. I can just go be about my business. So I want you to use this tool now, and I want you to use this tool forever after. Don't stop using it when the recession's over. Always, always, always use this tool. Use the same thing. Do it as a close of business. We prepare ours at MACKEY Advisors. They close the business on Friday at 5 o'clock. And that's whatever that ending cash is. That's what we use to compute our cash headroom. So how cash headroom is computed, the spreadsheet that you will be receiving will have the formula in there, but it starts with cash on hand. It adds in the receivables that you expect to collect in the next 30 days. It subtracts the payables that you expect to pay in the next 30 days. And it adds in your available line of credit. So available line of credit is, say your line of credit is $150,000 and you have $75,000 out on it. You have $75,000 available. So it tells you that what's available today. If I didn't do any more business, in other words, I don't get any more receivables, I don't incur any more payables, what's available right now. How I usually do what I'd like to have, that green line of where I'd like to be, is I like to have 90 days of cash. I think, we talk about that as individuals, we should have a 90-day emergency fund. I think every business should have a 90-day emergency fund. So 90 days of cash headroom. Do you have it or don't you have it? You may not have it right now. Don't worry about not having it right now, but figure out what that is. The warning line, generally you're going to have 30 or 45 days of cash running in your business to keep your business going. So 30 or 45 days of operating expenses and payroll are really essential for things will go wrong, right? Even in good times. So use this tool. Again, it's the spreadsheet you're going to get is fill in the blanks, use it, and use it every week. So you're going to get it prepared every week. You're going to save it, and so you can look back and begin to see your progress. You're going to love it, I promise. So let's talk about maybe some good news, huh? So how do we find opportunities? I think there's two things. We're going to find opportunities and stay out of fear. I'm going to talk about them a little bit differently. Opportunities exist in every market, in every economic market. And my favorite saying about recessions is never let a good crisis go to waste. Sometimes you have a crisis, it's not a recession, a key employee leaves. Again, any crisis is an opportunity for creativity, rethinking, reassessing where we are, and really some good strategic thinking. If you don't have a strategic plan and you don't have a lot of things happening right now, it's a good time to do it. And in fact, we're offering a workshop to help you get started next Tuesday called what's it called, Robert? Creating your business? Well, we'll talk about that in a minute. Never mind. But we're having another webinar on strategic planning on Tuesday. So how can you use this crisis to run your business better, more efficiently, more effectively, to serve your customers better? One of the things I'm going to ask you to think about is, are you solving problems? Or are you just a commodity? Are you a problem solver for your marketplace? I think if you think about, are you solving a problem that exists in the marketplace, you're less likely to be severely impacted than if you're just a commodity. So you might spend some time thinking about if you are a commodity, how do you become a problem solver for the customers that you want to serve? What is it that your customers want to have that really solves their problems? Another opportunity point, I got an email from one of our clients the other day that said, wow, I'm going to use this time to get some more A players. We all, at any time, you've got A players and B players and C players on your team, and people are being laid off right and left. So if you have the bandwidth, now's the time to recruit. You don't have to bring them on tomorrow, but start your recruiting process, start interviewing, start screening people, and find the new A players to replace some of your C players so that when you go back into business, you have all stars on your team. And another thing to think about is, can you pivot to winning industries? We talked about some of the things that are winning, but people that don't, companies that don't have face-to-face contact right now are winning. Can you change your marketing? Does what you offer work in a different industry than you're in now? And is it an industry that is actually thriving as in the midst of the recession? Can you pivot your marketing to really focus on that industry? I worked with a client last week that had been procrastinating for months about putting their marketing plan together. And I said, well, this is a great time to put your marketing plan together because they actually have their doors closed. So they committed to get together and get their marketing plan together. And they'll have a great marketing plan. So when they are able to open their doors, they'll be ready to get started and ready to move and ready to make some more money and thrive. So the other thing, last thing I want to talk to you about before we kind of close out is how do you stay out of fear? You know, I said earlier, if you lead with fear, your team will know it, and you know they will be in fear too. And everything will be disrupted. So you've got to stay confident and stay out of fear. For me, that requires I be outside, that I walk into the woods, that I stay grounded. I meditate every day. For some people, it's prayer. What is it for you? How do you put some self-care into your day? It's really easy right now. I don't know about you, but I'm really busy trying to make sure that everybody in my world is taken care of. And that includes a lot of team members and a lot of clients. And so I'm super busy, but I also realize that I have to take care of myself too as I go along, or I'm just going to get burnout. And I'm going to get, the more I get less self-care, I get more crazy in my head. Too much head thinking. You know, you got to stay grounded in your body. Are you making good decisions? Are you getting good data? Are you making informed decisions? So stay grounded, stay conscious of what you're doing. So last thing, we can have some more free resources for you. One is we're repeating this webinar next Wednesday on the 25th. If you would like to attend again, we welcome you to be there. If you would like to share this with your community, and we'd love to help more people. So please do. We have a Business by Design webinar. That's the strategic planning webinar I talked about on the 24th. If you think it's maybe now's a good time to reassess what you're doing as a business owner in a business, this is a great webinar for you. Next Friday on the 27th, we're doing a webinar called We Are All in This Together. We are all in this together, and the idea is that we don't have all the ideas. We don't have all the great ideas, but together we have all good ideas. So if we get together, we have even more ideas, right? So we can, I may not be able to solve all the problems that are out there in the world, and you might not either, but if we combine our collective thinking, we'll have a lot more bandwidth. So please join us on the 27th. And the last thing is check out our blog. Our blog is at mackeyadvisors.com and theprosperitypeople.com. We are posting almost all the time new information. And we didn't talk about tax payments, but when we talked about accounts payable, but for example, as you know, yesterday, they changed the filing deadline for federal taxes to July 15th, and they changed the payment dates to July 15th for federal income taxes. I expect the states to come along, but it's all been too soon. We don't know if that's happening yet. But check out the blog post, watch for information, sign up for our newsletter. We'd love to keep you informed. So, Robert, let's find out what kind of questions do we have.
Okay. Our first question, Mackey, is, are there any recommended e-commerce launches that you would recommend? And the second part of that question is, any ability to defer payroll or sales tax, specifically Kentucky?
Okay. Well, let's talk about the first piece. On e-commerce, I am not an e-commerce expert. My ability to e-commerce usually happens on Zoom. And we've been using that for years, and as a communication tool, we have clients all over the US, so it's really helped us broaden our marketplace. But if you come to the seminar on the 24th, the Business by Design seminar, that's a great opportunity, great place to bring your questions about e-commerce, okay? As far as paying taxes, is this about Kentucky taxes, Robert?
Ability to defer those taxes, whether they're 941 or sales tax.
Okay. That I do not know of anyone who's allowing 941 tax deferrals or payroll tax deferrals in general. That's it might happen. I have not heard any rumblings about it. What I would say is that when you have payroll taxes, when you're holding those in your cash account, that's somebody else's money. Basically, you, instead of if you were supposed to pay the employee $1,000, you withheld that tax, it's $250 from them. That's not really your money. So generally the government's not very lenient in allowing you to pay that slowly. And there's personal liability if you fail to pay it appropriately. So if you need to cut payroll, please do, and do it strategically, not with a with a scalpel, so you keep your A players. But yes, don't pay for now. I know of nothing that allows you to defer your payroll taxes. But check our blog, sign up for our newsletter. On sales taxes, I did hear from another CPA that sales taxes in the state of South Carolina are being deferred, but I haven't heard it from any other state. Again, as we find out more, we'll be posting it on our blog.
Thanks.
Good question. Thanks.
The next questions had to do more with the SBA disaster loan relief funds. And there was a question, do you anticipate any forgiveness environments related to the disaster relief loans? I can kind of speak on this topic. It's a very fluid situation. The disaster loan relief fund is one that's an existing SBA loan, was primarily put in place for property and physical damage, peril, tornado, wildfires, those types of things. So sort of in unprecedented territory with regard to a pandemic. There may very well emerge forgiveness environments, but at this point, nothing's been stated firmly, but our recommendation is still to pursue the application process. We can absolutely assist you in those areas. So let's seek out the fund, let's get the applications done, and we'll kind of deal with what the after environments tend to be at a later date. But our recommendation is to full speed ahead with the application process. Yeah, so kind of more to come on that environment. So.
Yeah, thanks, Robert. And remember, just because you apply doesn't mean you have to take the money. And if you take the money, you can always pay it back if you have the resources faster.
Yeah.
So there's kind of no one way to lose, but except if you don't apply.
Absolutely. At this point, Mackie, we didn't have any further questions. Okay.
For those of you that might need more help besides the tools that we're sending you today, we are offering the ability to engage us to help you. If you get the tools and you think, I don't know how to use these, for $6.99, we will work with you one-on-one, coach your team one-on-one to use those tools on a regular basis to get them started. If you need help every week, we have clients that meet with us weekly to discuss their cash flow, and if that would be of support to you, we're going to offer that service for the next 90 days for $7.99, which is below our regular fee, and we'll do that for the next 10 people that we hear from. So we'd like to be of service as much as possible and to help as many businesses stay in business as possible. Again, the objective is to survive so you can thrive when this is all over. I think that's all we had to talk about today, Robert. Is there anything else?
Nope, that's it. Thank you very much.
Okay. All right. Well, thanks for joining us, and look forward to seeing you on future webinars. And please stay in touch, and thank you for being part of our community. Bye.